What's going on, believers? Is Rebalance with another live price commentary. I want to shout out my mentor, Michael Huddleston, also known as Inner Circle Trader, ICT for short, for having such a well written risk disclaimer on his YouTube channel that I was able to just, for now, copy and paste into Notepad and display at the beginning of my videos to get that part out the way. Today is a couple of things I want to talk about, and featured today in the economic calendar is FOMC. So I'll open up that tab just so that this can be read, and then I'm gonna move on to the charts. There's about 10 minutes or so before that report actually hits the market. As you can see, it's 12:49 Central Time here. The news comes out 1 p.m. Now getting to the charts. There's three main things, well, four, maybe five, I guess you could call it, but that I really want to talk about. First is going to be what I saw. So coming into the week, my outlook, my anticipation was for a sideways movement in the dollar, leading to the potential for the US stock indices to trade higher into pools of liquidity that I saw as potential draws on price. And so that's kind of the first two, what I saw and what I thought. What I did, which was seen Monday and Tuesday, there were trades that I took. And what I didn't do, also what I didn't see, as far as yesterday was concerned, real life happens to everybody. These markets are typically moving about 23 hours a day. I believe that not all 23 of those hours are productive to be trying to take advantage of an opportunity, but that's just my opinion. Do your own research. But this particular candle here was a candle that I was looking at on Tuesday to see the willingness to trade back below this inefficiency on the hourly chart and the dollar index. Now, showing this large tail here on the hourly doesn't really give the full story, so I will drop down into the 15-minute chart. But the main point here is that it was seemingly ready to show weakness below this area, but failed to do so. Closed back inside of the range, consolidated into the close, and then we got yesterday's evening, dropped lower, did close below there, then immediately a bullish engulfing candle, right back into the range, and then playing the same game that it played over here, showing strength, running higher, eventually ran through this whole inefficiency, got to the high point of it, did retrace here, still respecting that H1 range, another rally higher, looking to see does it have the willingness to get up this other inefficiency up here on the daily chart. 15-minute, I'm always wondering why did price do what it did. I feel like that's one of the things that has helped me to stay strong in my pursuit of excellence in this business. I'm a curious guy. I like things that make sense. I like the thought that there's a reason for everything. And thanks to Michael Huddleston, aka ICT for short, I've come to see things in the market that I weren't seeing before I knew of him and his concepts. So you see this hourly inefficiency that was inverted. Let me go back to the hourly chart just to show that, right? Inverted in the sense that it offered resistance here, market trades lower, consolidates on April's high, begin rallying from that this week. We break above that level. One thing I like about that break above is this inefficiency that it left when it broke above. Shows displacement through the level. And so it inverted from resistance to support. There was a close below, like I mentioned here, but going back to the 15-minute, we'll talk about that. So 15-minute, there's also this inefficiency here on the 15-minute. This was that hourly candle with a large tail, but with the body closing back within the range. So on the 15-minute chart, the 45 candle is the last candle of the hour. So the candle that opens at 9:45 here closes at 10 o'clock. And right at that second, a new candle opens on the hourly, the 10 o'clock candle. So this is where that hourly candle closed. Same close as 15-minute as that hourly close. The opening on that hourly candle was here. And that's why it was a rather small body with a large tail. This down move here, this up move here, that all created the tail. This opening price to that closing price, that was the body. That's just kind of getting a little bit into multi-time frame analysis, which I believe is crucial to truly finding success in this business. I believe it's an art form that has to be mastered. But the gravitation to that level, that range here, the blue shaded range, just want to show you another example of perfection really quick. 103.399 is the low of this blue shaded range. This candle's close, if you look at the top left where the number is to the right of the C, right up here, that candle's closing price, 103.399. Perfect. Closed right at the low of this range. The next three candles on this time frame respects that same low of the range with the bodies, and then a rally back higher above the hourly range and back to using it as support to run higher. Okay, so those are all things on the hourly that I did not see, and the 15-minute. Just being honest, there's a complexity in this business to get to the level that I'm trying to get to be honest. There are simpler approaches, which I'll kind of get into a little bit here as I shift over to the S&P. There's about a little bit less than 3 minutes left before the high impact news hits the market and potentially some volatility picking up. But this real quick, start on a weekly and an outlook I did for last week. So the outlook that I did for the week of May 14th to the 19th, that was the Sunday that this weekly candle started. Before it had taken out the high of this week, this high and this low were of interest to me. How price responded if and when it got there. Took out this high last week as well as a few other highs. And my anticipation was continuation higher. There's equal highs here on the weekly. And so that is why my bias coming into this week was bullish still on the indices. I wanted to see it run here first and then trade lower. But just given all the things I just mentioned about the dollar, and the dollar is a inversely correlated asset typically with the US stock indices, the dollar is showing strength, allow for weakness, and the indices. Weakness in this one specifically, the E-mini S&P, on a weekly perspective, first target would be, well, the opening price of last week, the low of last week, and then this low from this inside week. And it seems like that may be the draw, the target that it's trying to reach to. Get to the daily. Inefficiencies, my favorite thing to look for when I open up my charts. This was inverted already. Well, it was violated. Hasn't been inverted because there was no retest on this time frame to see if it will act as resistance. But that's why it's shaded brown now. It was violated. Price traded into this one, and then it seemingly was acting as resistance, and then quickly it's been violated, and now we've traded into this lower inefficiency here. Equal lows down here, potentially the target. Hourly chart for today, I had to do something, and to be honest, I wasn't really expecting anything this morning to take place, so I wasn't as prepared as I typically like to be. And so this opportunity here was missed, but there was this hourly inefficiency that was traded up into at 7. The market rejected from there down into that daily inefficiency I just showed. We see on an hourly, the bodies are respecting the low, but we have traded below it a little bit. And then the 15-minute, just to get into follow up on yesterday's analysis, what I missed, right? What I didn't see, because I'm not perfect, but me doing what I'm doing now, like the why I'm doing this, first and foremost, it's likened to an athlete having film on himself or herself to go back and watch to see areas that can be improved. So that's the first reason. Second reason is just, had there not been some sort of exposure to disinformation by others out there in the world, I wouldn't be in the position that I am. And my trajectory in life wouldn't be on this current path that it is now. So if there's even just one person who is able to find some value in what I'm sharing, that's more than enough for me to continue doing what I'm doing, on top of me recording these for my own study of myself, for introspection, to go back and see where I was at in my development and how far I've come, and if there are any other areas of opportunity for improvement. But so yesterday, really quick, this was yesterday, this pink shaded area was not a part of my markup. And I'm not going to go down to the 5-minute. I'm going to keep it on the 15-minute today. But you can see this on the 15-minute chart as a 15-minute, right, inefficiency that was traded back into here at 9 a.m. Consolidation, respecting this low here, which was an old sell side liquidity from the day before. So Monday's sell side liquidity, we traded below it, but there was no close, a nice rejection. We finally closed below that, leaving this inefficiency. And so that low, in a classic support resistance mindset, that broken support turned to resistance here. But the thing that I'm really watching is this inefficiency here. I mentioned how trend lines are, to me, liquidity lines. There's liquidity resting above each individual high that comes in contact or comes near this trend line. I was not saying that they 100% never provide any sort of profitable entries into the marketplace. I did not say that. You can go back and re-listen to everything I said in the portion where I first drew this up and was talking about it. All I said was what I simply just said, was that there's liquidity resting above it, and I would prefer to take a trade, taking out that liquidity rather than subscribing to the idea that a diagonal line on this price chart is somehow dictating why price is doing what it's doing. That's just not me. So again, this is what was of interest to me that I did not see, but looking back on it, going back into the data and studying for what clues could I have seen to have helped with my analysis to guide me towards a profitable setup. So this was again what I missed. Nice opportunity. The thing about it as well though was the other sell side was from past Friday. So it was showing support there as well as in this old daily inefficiency. There was struggle in here, consolidation, liquidity being engineered, but ultimately understanding that this level of inefficiency had been respected, acted as resistance, and price was never able to get back to or through that level. Continuation lower with the dollar going higher. For me, that makes enough sense for me to say, oh, okay, hey, I missed that. Now I know for future reference, these are clues that I don't want to miss. These are clues that can lead to a nice price run potentially, which is exactly what happened. Let's even just use 41.96 and 3/4 down to let's say 41.15, right? That's 80 plus points right there of opportunity for profit. And so that's a very, very solid expansion for the E-mini S&P. That's more than enough to accomplish an 8% month, in my opinion. It all happened over the span of 2 days, right? Just two morning sessions. And that's not even speaking about getting an entry anywhere near the top, right? The market already been dropping lower before this entry. This is about 30 points lower than the actual high, than the top per se. So again, that was just a little quick recap of yesterday, what I missed, right? Now coming into today, like I said, real life happens. I had some stuff to take care of this morning. And with the current news that I mentioned, the FOMC high impact news, I'm typically not expecting the morning session to be very busy because of the volatility that could come with anything related to the FOMC. But in hindsight now, right, speaking from hindsight, a nice price run in the morning and overnight, and then see how it's kind of fizzled out here. Like I said, what some would call exhaustion. This is, to me, seek and destroy conditions, choppiness, consolidation, and right ahead of an afternoon FOMC news event. So what I'm seeing is choppiness, potential seek and destroy. What I'm thinking is, well, with that opening, we did get some volatility, but it hasn't gone anywhere. It's 1 o'clock. Market closes for today at 4 p.m. and then it reopens at 5. And there's more news tomorrow. There's plenty of news actually coming the next couple of weeks, to be honest. There's more interest rate decisions, CPI, PPI, unemployment claims every Thursday. So there's always news or economic calendar events coming into the marketplace to inspire certain sentiments. The sentiment for today, I would anticipate, would have been a continuation lower. They've continued to raise the interest rates, albeit less over the last couple of decisions to just 25 basis points. But the theme is still increased interest rates. Those interest rates being increased are supposed to help strengthen the dollar, meaning higher dollar index prices and it's inversely correlated with the US stock indices. So lower prices in them make sense to me who subscribes to that idea that I just mentioned. And so with the anticipation of the sentiment being continuation lower, I would expect that it does what it's doing now, which is consolidate more or a run to buy side. Now, buy side at this point rests above this high here. Also, note it's not noted with any sort of visual representation, but there's this inefficiency between these candles here that this one did trade into before rejecting and making a new low. But also, this high here within this hourly inefficiency, there's buy side resting above there. And then ultimately, above the yellow shaded area, there's this buy side. Now, would I expect that to happen right now or even at all this week? I really can't say at this point. The dollar has continuously run higher for all of May. And so until the dollar starts to show some signs of weakness, or at least a deep retracement potentially, it would be hard for me to really confidently say higher prices in the US stock indices, in particular the E-mini S&P. And so as far as the things that I wanted to say, the last thing is that this isn't for everyone. Now, I truly believe that I was gifted with a very analytical perspective on life in general. And I believe that that is one of the catalysts that prepared me prior to being exposed to this business to be able to believe in myself and to believe that I can achieve success at a high level doing this. That's not the same story for everyone else. I know that there are other people who I've come to meet through this business, through social media predominantly, who have different stories than mine, but they still have a high belief in themselves that they can do this at a high level and they continue to work on it for those reasons. And so it's not that you have to be like me, but I believe that belief is a huge, huge catalyst. And where an individual gets their beliefs from, I don't know. I'm not you. I can't say. I can't speak for you. But I feel like if someone takes the time to really try to understand where their beliefs come from and why, and channel that into this, I believe that those are the people that can have success because it takes time, energy, and effort. And there's lots of pain and long days and long nights, dark days, dark nights. Just being honest, right? The only guarantee I can give is that you will lose money. And so I just wanted to, again, offer another commentary of live price as well as some transparency about my thoughts. And I hope that at least one person finds some value in it. And so I was hoping for a more volatile impact with the FOMC high impact news hitting the market. Nothing really too exciting, to be honest. So I'll be back with another, commentary, whether this week or next week. But I'll be back. As always, shout out to the believers. Shout out to the dreamers. Shout out to the homies that inspire me to be better each and every day. And so, with that, y'all take care. I'll talk to you in the next one. Peace.